Good morning, it's Harvey Jackson. Just going to go through some of the top news items that I've seen. China, Russia show some unity. BRICS trade more and more, it seems, and it seems to be more of a trade pact than ever before. There's a bit of show of strength here. China's parade showing some new weapons and is trying to send a message of deterrence. Do not stop China, as they show some nuclear weapon capabilities, some longer range capabilities. In their parade. Something along the same lines with the BRICS. Petrobras CEO touts strong demand from China, India. So if we don't know what the BRICS are, it's Brazil, Russia, India, China, and then South Africa. And what they're just kind of pointing out there is just how some of this trade relations are just getting stronger. OPEC is considering further oil output hike on Sunday. They're keeping these prices at these lower levels, and it's just putting pressure on some of this market for the renewables, as the market is not in the 70s, it's in lower to mid 60s, and the OPEC countries can make money at those values. So we'll see on Sunday what they're going to do for the October timeline. Weekly exports kind of hit right on targets, or where it was expected as far as the weekly export numbers. The only one that's an outlier would be the wheat. Continue to see more and more export inspections, and low prices do encourage more sales. So that might be a way to get this fixed to happen here. Crop progress highlights. Corn, good to excellent, have been going down. Soybeans going down as well. And the fact that there's some dryness in some of those key areas for the corn and soybean growing areas. But the other part of this, that it's a normal progression to see good to excellent ratings go down. And again, this is a visual thing as the crop dries down. The other notable thing is the spring wheat is 72% harvested. And this is just a visual of the rankings and how they've changed, and it is in some of the key growing areas, right? The bullseye here, where both the corn and soybeans had a drop in good to excellent ratings. This is kind of highlighting the same thing. This is where the dryness have been. They need rain in some of those areas to get that max pod fill on soybeans, and to get corn to get increased weight as well. Active wet radar going across the Great Lakes at the moment, and then if we see what the radar's looking like it's going to do for the next couple of days, it's still pushing more rain across the Great Lakes there. Here I'm just highlighting the differences in temperature, and what I'm looking for is these low temperatures in the blue, but it also gives us an idea of the highs that we're seeing during the day as well. It is getting cool. We're seeing too, so frost on some of that green soybeans or edibles. Those crops are going to have some impacts on yield. Even the corn as well cannot take a whole lot of frost without impacting yield. Here we're just showing the growing degree days base, and you can see that the southern prairies have actually collected a lot of heat units or growing degree days. So things have advanced really quickly this year, especially in the south, maybe a little bit more than expected. Drought model is showing some red bullseyes in Edmonton area, Regina, and into parts of western Manitoba as well. Just a quick look at the markets here. Canola is down close to $4. Rapeseed is down $1.50. Soybean oil is down 30.33 of a cent. Crude oil is down $1.33. Soybeans just slightly down, but basically unchanged. Soy meal is basically unchanged as well, and the wheats are down again as well. Spring wheat leading the charge, and the Canadian dollar is just slightly down as well. So if we have a look at the channel, downward channel, we're getting closer to the bottom end of this downward channel. We can continue with time to try to get down to our sales target of 603 is the sales target to get out of our shorts. A lot of those shorts we got into those markets in that area up here. So pretty nice trade to put on some sort of defense at this near $700 value. And just take note of that. What I also is just showing you some of the carry in the market here. So we've got $12 and and 10 cents difference between the November and January, and then from November to March we've got $22.50 differential. If that works out for your farm timeline to start making some sales, just keep note of the spreads. The wider these numbers are, the more it's telling you to sell the future. So it's not a bullish signal, it's a bearish signal, the wider those spreads get. And I'll show that on the wheat as well when I get to it. So European rapeseed, you can see that it's in this downward channel. We're at the bottom end of the downward channel, but just bouncing back and forth in this wave formation going down. It doesn't seem to be showing strength, and yet the price differential has increased on the price difference between the European rapeseed and Canadian canola, priced in Canadian dollars. So it is $125 about cheaper than the Canadian canola is $125 cheaper than European rapeseed priced in Canadian dollars. Like we were talking all last year, we get in that $150 to $200 range. It definitely will be looking at more sales going that direction. Soybean oil futures, right at the bottom end of this trend line. Again, anybody can draw a trend line, and it's subjective to the person drawing it. But we're looking for some support here. Even some of the moving averages we're looking for it to bounce up, and that would actually keep the canola from actually pulling down as well. Some red day yesterday, another red day so far on soybean. It looks like it's trying to build for either a move up or a move down in this chopping sideways here, just about some of those moving averages. Soy meal just continued to get cheaper, but it looks like it's making lower highs, and it made a lower low here. Is this going to make a lower low is the question. Is it going to get below that one? And that's just simple chart fundamentals. Crude palm oil still on the upward slope, chopping around at some of the higher values. As stated with the news article, we're just in that mid-range where the soybean or the crude oil is trading now. Will it stay there? If there's going to be some increased production from OPEC, probably put some pressure on it to probably push it down into that low 60 ranges. Canadian dollar moved up close to that $73 mark, and 2 days of going down. Poor economics in the Canadian economy for sure. US dollar index still chopping basically sideways at this 98.5 level. Wheat, nothing nice to see about here, but one thing that some of these technical indicators, it looks like we're oversold, and we continue to be oversold and still continue grinding lower. So this is always since July, so it can be oversold a lot longer than you think. Price differential here, just showing the carry in the market, 22 cents to go to December to March, and 36 cents to go to December to May. If that's your timeline that you're going to sell grain, pay attention to these spreads. The wider the spreads, more likely the signal is to sell the future, not to sell right now. Just a poor fundamentals of the chart, just basically chopping sideways and downward trend. Doesn't look like it's over on that chart, and yet if we're looking for support, it seems to be coming from the Chicago complex, where we've actually traded low and chopping sideways for almost 2 weeks here now. And if you look at the French milling wheat, it's in this downward slope, just like with all the other wheats. Corn futures, on the other hand, is got this upward momentum right now. It has to beat this number and this number, which is basically the same thing. It has to get above that 626 area for it to look like it's going to make a breakout to even higher highs there. Susan Stroud posted this on X, and what this is just talking about is Brazilian corn demand and the increase in their ethanol, and it's going to chew up a lot of their corn that they already have kind of slated to get used. Next report is the StatsCan next. I think it's on September 9th, and so next Tuesday, I believe, and it's going to have the ending stocks July 31st. I do expect those numbers to be moved up as ending stocks probably need to be moved up just to balance some of the S&Ds.